Hello, welcome, and thank you for joining us today in the first of our LinkedIn Live sessions. Today, we're focusing on China, state of the market, and growing your business, setting up and maintaining WFOEs in China. My name is Rupert. I spent a decade living and working in Greater China, and since returned to the UK, where I run our APAC sales desk based out of London, supporting our corporate and multinational clients with their overseas expansion into Greater China and Asia. I'm joined today by two colleagues, Donald Sung, head of our corporate services team for Greater China, and Jack Yen, general manager of Intertrust Group in Shanghai. Both Donald and Jack have got a wealth of experience in the technical expertise and practical knowledge and understanding of doing business overseas, and so their inputs will no doubt be invaluable. So, for those of you who are not familiar with us, we are Intertrust Group, a CSC company, the exciting recent combination of these two significant organizations. Together, we're one of the world's leading and most established corporate services administrations providers. We're present on 5 continents and from 30 physical international offices. We service more than 140 jurisdictions across the world. We have an excellent client base, which we're extremely proud of and always looking to expand. So, taking a look at our agenda today, we've broken this down into 4 key parts, which we view as a reflection of the 4 parts of the life cycle of doing business overseas. Part number 1, entering China and some of the macroeconomic considerations for affecting how, when, and where you might set up. Part number 2, setting up your WFOE and some of the more technical aspects of the incorporation process. Part number 3 is annual maintenance and the statutory obligations you'll have to adhere to once you decide to enter the market. And then part number 4, exit considerations, your options for exit, and how to repatriate profits back to the shareholder. So, getting started, part number 1, entering China, and why invest in China. In just over 4 decades, China has transformed to become the second largest economy in the world and a global powerhouse. Since 1978, China has gradually moved away from being a closed, planned economy to a more open, market-orientated system. The economic results are staggering, and from the end of the late 1970s, China has achieved a 10-fold increase in GDP growth. This has coincided with a number of sweeping reforms introduced by the Chinese Communist Party, designed to open up China, make it more easily accessible to the outside world. Alongside privatization, the development of the stock markets, the development of a robust banking system, a gradual series of policy reforms have made China more accessible, putting foreign investors and businesses owned by foreign shareholders on an equal playing field to their local Chinese counterparts. In terms of FDI, China received $163 billion of FDI in 2020, making it the single largest inbound destination for FDI in the world. As we look at the growth of the middle class, they've generated enormous consumer purchasing power, which has fueled opportunity for both overseas and local organizations and brands. The number of middle-income families in China is currently estimated at a staggering 400 million households. And the number of Chinese households, or the portion of Chinese households expected to be mass affluent by the end of 2030 is 58%. Technology, R&D and manufacturing are additional areas that have sparked significant interest and inbound activity into investing in China. And as we all know, it's an import and export powerhouse. In 2019, China exported $2.5 trillion worth of goods, making it the single largest exporter in the world. And on the flip side, it was the second largest importer. However, China has faced a number of challenging headwinds over the recent years, largely as a direct result of the COVID-19 pandemic. Premier Xi Jinping recently reaffirmed his strong commitment to his strict zero COVID policy. And although efforts are being made to gradually loosen COVID restrictions and catch up with the rest of the world in terms of living with the virus, as examples, inbound travelers are still subject to 7 days quarantine, following which they have to do 3 days of home isolation when landing in the country. And there are still sporadic and strict short notice lockdowns. I'm sure we all saw the news recently of the visitors of Disneyland Shanghai getting locked inside the gates of the resort to all undergo mass testing. So over the last few years, extensive lockdowns have had a heavy impact on retail, F&B, and importantly, the labour market. This has reduced manufacturing, having a consequential knock-on effect on the rates of export, all of which have harmed China's growth potential. The economic growth has slowed to just 2.24% in 2020, the lowest rate in more than 3 decades. There are, however, positive signs on the horizon. Growth is starting to rebound. FDI has picked back up again. And although we haven't quite reached pre-pandemic figures, economic growth towards the end of 2022 is expected to be 4.3%. So, despite these challenging times, we have seen our clients continue to grow and to capitalize on pockets of opportunity, some of which have arisen more recently, resulting from industry trends and socioeconomic dynamics. We've listed 4 areas here that we're going to take a quick look at where we've seen our clients continue to expand and do well. The first of which is data centers. E-commerce has exploded in China, as has digitalization. In 2020, it was estimated that the digital economy contributed a whopping 38% to China's total GDP. Similarly, the prevalence of smartphone usage has exploded enormously, and it's been recently estimated that the average Chinese mobile phone user spends 6 hours a day on their mobile phone. All of this has contributed to an enormous demand for digital and data infrastructure, and we've seen significant interest and heightened activity, within the setup and management of data centers. That is on behalf of private clients and private businesses, and also the government itself, who's embarked on a more recent path of, as they call it, Eastern data and Western computing. Looking quickly at pharmaceuticals, biotech, and the medical technology industry, we've seen a lot of cases and had a number of successful market entrants into China amongst our clients in recent years, and increasing. From our side, this has typically been high growth US startups looking to capitalize on the breadth of opportunity that China has on offer, ranging from product development, manufacturing, sales, research, and clinical trialing. The pharma and biotech industry today is 10% of the total inbound FDI into the country. Moving on quickly to real estate, the real estate industry in China has had some challenging times and is cited to be one of the contributing factors to the slowdown of economic growth. However, within that, there are pockets of rapidly rising opportunity for investors. And one such area is the gradual divergence away from traditional real estate investments, commercial and residential, through to a growing trend, largely following the digitalization and the e-commerce explosion that we've seen. This might come in the forms of data center sites, storage to support the logistics infrastructure for e-commerce business, industrial parks, and such venues. And then finally, we heard a moment ago about the continued projected growth of the wealth of the Chinese citizens, that middle income growth and the purchasing power that comes hand in hand. As a result, it's expected that consumer goods and services and related industries to consumption will continue to do well hand in hand with this growth. So here we have a number of snippets of headline publications and articles, hopefully demonstrating that although these are our observations from how we see our clients developing, these are also commonly reflected in the market and are generally accepted trends currently. So, moving on to the second part of our discussion, setting up your WFOE. The first key decision to market entrance in choosing your entity type. And in China, this comes in 3 primary forms for a foreign investor: a WFOE, wholly foreign-owned enterprise, joint venture, and a representative office. Now, the WFOE is a limited liability company, 100% owned by the foreign shareholder, and it's the most popular form of market entry for overseas clients. The second option, joint venture, is also a limited liability company, but with the nuance that you have to partnership with a local Chinese partner. Now, this offers a number of possibilities, and often we see rapid early expansion from JV market entrants as they're able to capitalize on the existing infrastructure, the knowledge, the existing network of their partners, potentially even the existing sales and distribution channels. However, according to Chinese law, the JV partner has to take controlling shares and a controlling interest, i.e. more than 50% of interest in that JV, forcing you to hand over quite considerable portions of control and, of course, ownership. Finally, if we take a quick look at the rep office, the rep office has no legal substance or form of its own. It is merely used to represent the activities of an overseas legal entity. There are benefits as the compliance burden is reduced. Therefore, arguably, the cost and complexity of maintaining that company are more straightforward. However, there are restrictions on the breadth and scope of business activities you can engage in. You can't hire employees and you can't engage in profit-generating activities. So, if you're looking to open up a fully fledged local onshore operations in China, then WFOE and JV are the way to go. As we mentioned, WFOEs are by far the most common form of market entrance and the most popular structure that we help our clients to set up. As a business that's fully owned by you enjoy full control over its operations, management, and strategy. And as a limited liability company, it's a standalone legal entity. And importantly, the liability is limited to the contributed share capital. Additional benefits are the breadth of operations that you're allowed to engage in. And these are subject to the scope of your business license, which we'll come on to in a few moments. But broadly, you have significant freedoms. You can hire employees, you can raise invoices, you can engage in commercial contracts. And then crucially, you're able to convert RMB profits to foreign currency for outbound remittance during the profit repatriation process. Donald, is there anything else you'd like to add in relation to the different entity types?
Yeah, sure. Thank you. Thank you, Rupert. Hello, everyone. I suppose one of the associated benefits of having a WFOE is that we mentioned here the ability to issue invoice. In fact, the implication is that be able to issue invoice, a WFOE can also offsetting the input VAT from the purchase and expense incurred by the WFOE by offsetting of the output VAT of the invoice from the revenue. So actually that will create a tax efficiency. We are generalization here, but generally speaking, a WFOE will be much more tax efficient compared to the rep office, which is a legacy type of entity type we mentioned here. Because in full operations, basically a WFOE will be able to offset the tax, while the rep office will be paying tax on every penny they spend. So in other words, it's much more efficient to structure tax by way of WFOE here. Yeah.
Great.
Thank you.
Thank you very much. Okay, so moving on to the incorporation process. What we have here is a visual of the end-to-end process to set up your WFOE from incorporation to having it fully up and running. We split this when we support our clients into 5 key stages: pre-incorporation and the considerations and decisions that go into structuring your business; incorporation, including name pre-approval and the business license application; treasury and funding, including bank account opening and capitalizing your business; tax registration; and then finally, when it comes to hiring employees, setting up the social insurance and housing funds. Now, we'd like to highlight 3 key messages throughout this process, which is firstly, the pre-incorporation process and the decisions that you make have pivotal importance, not just during the setup phase, but throughout the lifespan of how the WFOE operates. Secondly, in the incorporation process, the business license application, the moment the business license is granted is the moment at which the WFOE is live, and crucially, you're able to engage in contracts. And then thirdly, a general comment, even once the WFOE is live, as you can see in stages 3, 4, and 5, there are still quite considerable steps and work that need to be undertaken. Okay, so moving through the incorporation process, this is a quick word on the business scope and licensing. The business scope, as set out in the Articles of Association, is a one-line description of the WFOE's activities. And very importantly, The business scope will help dictate the type of WFOE that you're incorporating. In China in general, we see 3 WFOE types: consulting and service WFOE, when your primary form of business activities is providing services to third parties; manufacturing WFOE, when you're engaged in manufacturing business; and then finally the trading WFOE, when you're engaged in all aspects of that trading and sale business. I'm going to pass over to Jack now for a few words on the business license process.
Yeah, thanks, Lucas. It's apart from the common business scope, actually there's some restriction in terms of some special industry for the newly set up entities, referring to the market access negative list issued by the central government, which indicate that which industry are forbidden and which industry are applicable to special permit for the newly set up, such as pharmaceutical, medical, and real estate. Normally, qualification condition not well, including but not limited to total investment, business skill, and headcount, certificate of the individual expertise, infrastructure, and so on. And one of the typical cases example here is that some of the foreign investor will engage a law firm to design VIE structure in order to have the qualification for the ICP license. So back to Lucas.
Perfect. Thanks so much. And I think the key message and the key takeaway here is that we define the scope of the activities and the business scope. Business scope affects the WFOE activities. WFOE activities affect the license that you need to apply for and will be granted. And then the license will dictate all of the future activities of the WFOE. And if you engage in license that are not covered, engage in operations not covered by the license, you're running the risk of engaging in illegal activity in China, potentially with quite serious consequences. So as we look to apply for the business license, I think these areas will all be quite common to those of you on the call who've incorporated an overseas business before: the name, the address, the registered capital. And what we're going to do is pick out a couple of significant contrasts with how the Chinese requirements perhaps contrast with what you might be used to elsewhere in the world. When it comes to the company name, the Chinese name is of critical importance. It is the only official registered name for the business, and the English name will not be officially registered. It's therefore important to choose a name that's really applicable and appropriate for your business, and having a local partner who's able to assist you in doing that. It's also very common for Chinese names to be taken and to be used, and we generally see cases where we have to apply multiple times in order to find that availability. When we look at the registered address, many jurisdictions around the world operate with the concept of an outsourced registered office address, whereas in China you have to have a physical office, even if this is a service center such as a WeWork. When it comes to registered capital, a very common question from our clients is how do we calculate the value of the registered capital? And the general rule of thumb that's applied is that the registered capital should be sufficient to cover the funding requirements of 1 year of operations of your business. Registered capital is not the only form of funding option that you have, and you can inject an intercompany loan. The registered capital plus the intercompany loan together equal the total investment, and there is a strict ratio that you have to adhere to. I think 70% registered capital to 30% maximum of intercompany loan in relation to that total investment. And then very finally, the management structure. There are 2 common forms of management structure in China, and we're going to have a look at them in the next slide. Are there any other comments that Donald or Jack might like to add at this stage?
Well, I think in terms of the registered capital, I think it's important to highlight that in the past, like a few years ago, Chinese government actually revamped the company law and make doing business much easier than before. I mean, when we start what we do like 20 years ago, to set up in China, we really need to get the approval from the city, sometimes province governments, to determine what is the registered capital level. We really need to get the pre-approval from them before we can actually proceed with the incorporation. Now it's much more liberal. The company should come up with an idea of how much capital we need in the next 12 months or so. then we can determine what capital is required. So we don't need the green light from any authority, basically. So I think that's a big contrast in terms of the company name. Rupert, you rightly mentioned that it's very often we come up with a very similar name of another existing business. So we always advise clients to have at least 3 options for us to run the check, if not 5. So the more is better to make sure that we get a streamlined process.
Yeah, thank you. And actually, as you speak on, one quick question that comes to mind for Jack: does the registered capital have to be paid up for a Chinese company?
According to the enterprise law renewed in 2 years ago, the registered capital is not compulsory to be fully injected according to the local law, which will be subject to the requirement of the cash for the business.
Perfect. Thank you very much.
This is also a huge advantage for business. Like, again, with the perspective of, like, in the past, if the contrast in the past, we always have in the past, like, we have 2 years to pay up a certain percentage of the capital, and then you need to pay up the rest of that with a specified period. Now we don't have that, so that business have more flexibility and liberty to plan their cash flow and capital requirements.
Yeah, excellent. Okay, thanks so much. So, management structure, and moving on to those 2 options that we mentioned. Within option A, there are 3 roles that need to be undertaken by 3 different persons, as you can see up on the screen. Option B, there are 7 roles which need to be undertaken by 5 different persons. And I think when it comes to considering which option is most appropriate for you and the management of your business, it's worth boiling it down to the simple question of perhaps, bureaucracy and control, whereas decision-making and executing decisions on behalf of the company is likely to be more straightforward under option A, with a smaller group of controlling persons involved. Option B, whereas perhaps more convoluted, will offer more control and enhance the corporate governance over the decision-making and operations of your WFOE. Now, there are a number of names of different roles up on the screen here, and we're just going to highlight one, which is of pivotal importance when it comes to managing your company, and that is the legal representative. The legal representative represents the company and is responsible for performing duties and powers on behalf of the company in accordance to Chinese laws and in accordance to the Articles of Association. Now, we emphasize this because the legal rep is arguably the most important individual role when it comes to day-to-day management of the company, and that is the individual who will be held responsible for all of the future activities. It's very common to ask if there are any residency requirements for the legal rep role, and although there are no legal requirements for that individual to be locally resident in China, it does have significant practical implications. There are various points through the WFOE's lifespan where the legal rep has to be present in person. For example, the tax registration, or the opening up of the bank accounts, or attendance to certain banking matters in the ongoing operations. So even where our clients don't have a sufficient individual on the ground in China, they'll typically look to elect a legal rep in an area where they can travel relatively easily, perhaps with the exception of quarantine restrictions, and that might be based in, for example, Hong Kong or Singapore. Okay, so moving on to bank accounts. Anybody who's on the call who's set up an overseas business before knows the relative pain of setting up international bank accounts. And here we've broken it down into some of the most common questions that our clients ask us. I'm going to bring Donald back into the discussion now. And so, Donald, what bank accounts does the WFOE need?
Yeah, so typically we will need capital account as well as basic account. So basic account basically means that it's an operating account of the WFOE. So why we need a capital account? So capital account is basically one of the foreign exchange control measures of the Chinese government. So WFOE is required to set up a designated account for its capital transaction. That means capital injection, or in the event of capital reduction, capital repatriation back to the investor, it will have to go through the capital account, not any other accounts. And then injected capital will be converted into renminbi if it is coming in as a foreign currency, and then transferred to what essentially a operating account known as the basic account for daily operations such as receipt of payments and paying of expenses.
Perfect. Thank you very much. And when it comes to those two accounts that you need, can an international bank be the sole provider, or do you need to have a local Chinese bank as well?
Yeah, this is a very, very common question, and we come across. So the short answer is yes, you can have the international banks as your sole banker in China, but we need to check that whether the banks actually licensed to offer both capital and the operating accounts in China. Otherwise, it won't work. So it's always worth to check in advance before you set up and speak to your bankers whether they have those licenses to operate both accounts. So, like, in addition to that, it's also important to check whether your preferred banker, international bankers, have established the auto-pay channels with the relevant government agency, such as tax authority and social contribution authority for employee social contribution, because these payments are typically auto-pay, auto-charge from your WFOE bank account. So the bank has to be able to support this kind of recurring payments quarterly and monthly. Otherwise, again, it won't work. So you need to check in advance. But typically, for big banks like HSBC, Bank of America, they have the license to operate in most of the cities in China for those activities.
Yeah, understood. And how about the bank account opening process? How does that vary locally and internationally?
So essentially, it's very similar. So it's not much difference. But interestingly, what we see is that sometimes international banks could offer more flexibilities in terms of account opening, client due diligence, if they are not designated for transacting those government-related payments, etc. So if they are not really meant to do the safe government transactions, typically you can get more flexibility with the international bank. It's kind of interesting to see because you may imagine that, okay, foreign bank may be subject to more regulatory scrutiny in China, but in fact, it's the opposite. The Chinese government keep more scrutiny on the local banks.
Yeah, understood. And okay, I think bank account opening timeframes are quite considerably different as well, aren't they? With the local bank being able to open accounts within a considerably shorter period of time.
Yes, that's generally the case in China.
Yeah. Okay. And then finally, any main operational considerations for choosing a local or an international bank?
Yeah, I think the branch network, the physical branch network is still important, and the proximity to your office and your operational location are still one of the key considerations. Because in fact, even today, some of those transactions have to be done over the counter at the banks, especially on payments to overseas, just because China have still the foreign exchange control. So for those transactions that is subject to foreign exchange control, will typically have to be done in the banks over the counter. So where the bank's located is still a very important factor. On the other hand, all the non-safe regulated transactions can be pretty much do online these days. So it's very important to check whether the banks offer a interface that you like, it's a user-friendly internet banking system that you like for your operations in China. And last but not least, tax payment, again, and social contribution payments are critical for your WFOE, both from operational but also compliance perspective. So local or international bank, we advise clients to speak to their bankers to confirm that those banks can support those essential functions.
Brilliant. Thanks so much. Okay. And one quick reminder for me to the audience, we have a Q&A session at the end of the session. And so any questions, please pop them in the chat and we'll address those towards the end. Right, so we've seen this slide before in the 5 stages from pre-incorporation to post-incorporation. The additional overlay that we've added are the timeframes at the bottom. Now, if everything goes smoothly, we estimate that we can assist with a with the incorporation and the full process in 3 to 4 weeks once the name pre-approval application goes in. Jack, what are some of the areas that often slow down our clients or cause delays?
Thanks, Lucas. I think there's 2 tips here. One is one of the compulsory documentation requested in the incorporation stage will be the incorporation certificate of the shareholders. The documentation is required to notarize in his own country and then authenticity by offshore Chinese embassy. Therefore, it's strongly recommended that the client entity can start his process at its earliest convenience. And considering the timeline of the notarization process is relatively long, normally will take 1 or even 2 months to complete. And secondly is the lease agreement. Different from the Western countries, the virtual register office definition are not applicable in China. Investors need to choose a physical office space for both registration purpose and future business operation purpose. So if our clients they do have difficulty to address the location, so maybe the business center normally they will provide a single room for the registration will be a good option for the setup business. Yeah, so back to Lucas.
So the notarization of the shareholder documents and also finalization of the lease to be used in the business address.
Yeah.
Okay. Fantastic. Okay, so moving on to part 3 in the annual maintenance of your WFOE. Now, a relatively peculiar aspect for overseas businesses of managing your Chinese WFOE on the ground in China is the importance of the CHOP and the company seal. I mean, in many respects, the CHOP in China really replaces the signature as a formal way of legally executing documents. And I'm going to bring Donald back in to talk a little bit more about that.
Yeah, you're absolutely right, Rupert. Basically, the simplest way to understand this is that CHOP is equivalent to the signatures to the rest of the world in doing business in China. Whoever holds the CHOPs, we always say that whoever holds the CHOPs have all the authority to effectively run the WFOE, from doing the business on like business as usual to selling the significant asset of your WFOE. So it is paramount to govern the use of the CHOPs. That's why we always advise clients that to really think in deep how to govern and administrate the use of the CHOPs and have a proper policy and effective controls on who will handle the CHOPs, when the CHOP will be used, and what methods the CHOP will be used. We cannot stress enough, in fact, how crucial it is to manage these little round things in China. In fact, many of our clients engage us to administrate and to physically keep the CHOPs for them, and also to draft the policy and execute those controls on behalf of them, from holding the CHOPs and also putting the CHOPs on documents after we receiving the proper approval from the authorized person from the company, in case they don't have anybody to trust in China. So this is how important it is. We cannot stress enough. What interesting another point about is that in the situation of COVID, actually Chinese government rolled out what we call the electronic CHOPs recently to really resolve the issues of like unable to physically access to the CHOPs. So nowadays in some cities, actually there are electronic CHOPs that we can use to execute documents.
Brilliant. Thank you very much. So look, I think that message is pretty clear. The key takeaway is the importance of the CHOP in China. So now we are moving on to a slightly technical area, and I'm delighted to be able to hand over to Jack to provide an overview of accounting requirements and then spend a few minutes on the tax obligations of a WFOE.
Yeah, thanks, Lucas. I think a PRC accounting requirement is one of the key compliance obligations for the China entities. First of all, the reporting frequency which is result not only depends on the group management reporting requirement, but also need to fulfill the local monthly or quarterly local filing requirements, such as tax filings or official like statistic report requests by the government authorities. So the finance statement is required to submit during the filings. In terms of the bookkeeping work setup, chart of accounts typically 4-digit code for the preliminary accounts. For PRC accounting ledger are request. In terms of the accounting software, normally there will be two options here. One is that our client will use the PRC qualified accounting software directly. Another will be that they will use their global platform. But if they go with this option, localization work will be requested to fulfill the accounting software requirement in aspect of language, chart of account, display template of accounting voucher, ledgers, and in terms of the accounting standard, I think since China government issued new PRC accounting standard from 2006, the PRC gap has continuously convergence with international accounting standard, with a series of amendments in terms of lease, revenue recognition, and fair values, and financing tool in the past decades. So there's very limited gap difference for the common business model, and the key difference is only in measurement model. PRC's core measurement nature is historical cost, while international accounting standard has measurement focused on fair value basis. Last one is that in the notes that one of the key role here is the finance responsible person. The role will be registered in the tax bureau. So which also mentioned in the management structure. So the role mainly focus on the conducting authorization in local tax bureau platform, attend tax inspection or physical tax meeting required by the tax authorities, which may a little bit different from the typical definition of the finance bureau to build up the finance department, to set up the rule of the finance department procedures. So this will be a little bit different. And maybe next slide. Thanks. Okay. If you're referring to the slides, you can see there's up to 18 tax category locally, which create a little bit complexity for the tax obligations. However, the common tax category applicable to majority of the business is a value-added tax, the corporate income tax, and stamp duties. Value-added tax is a turnover tax for the service or trading revenue, and corporate income tax is normally applicable to the profit before tax, and stamp duty is mainly subject to the different categories of the commercial contract. I think the most important thing is to map local business activity to right tax category and understand the overall tax liability and positions. So tax category and the starting filing timeline will be determined in process of the tax landing procedure in the post-incorporation stage. So this is the content from myself. So back to Lucas.
Yeah, thank you so much. And perhaps one area to highlight, in addition to the VAT, the stamp duty, and the corporate income tax as the three primary buckets of tax obligations, is the individual income tax, which is naturally related to the hiring of employees and the tax liable by each one of those working individuals. Yeah. Okay, so that concludes our section on maintenance, and we're moving on to part 4, exit. As we're all aware, China remains a tightly controlled economy, and the RMB is subject to strict foreign currency restrictions. And the two logos you can see on the right-hand side of the screen are the two bodies that really are in charge of overseeing and administering that FX policy. The first is SAFE, the State Administration of Foreign Exchange, and the second is the People's Bank of China, China's central bank. So, when can you pay profit back to the overseas shareholder? There are generally three moments and conditions that need to be satisfied. Number one, when you have retained earnings in the business. Number two, once you've satisfied tax compliance onshore in China. That's corporate income tax of a general rate of 25%, and dividend tax, an additional rate of 10%. And then thirdly, once you've completed a statutory audit. So in order to formalize the profit repatriation, you'll make an application to your bank. You'll provide supporting documents to demonstrate that those conditions have been met, and answer perhaps additional questions that the bank representing the authorities may have on that transaction. And hopefully the bank will review and approve the payment on behalf of SAFE. Have I missed anything, Donald or Jack?
No, I think it's all good.
There you go.
Yeah.
So when it comes to the final stage, exiting your business, there are two broad options, and these, of course, are quite consistent with elsewhere in the world. We have sale and we have liquidation. Items to consider in the sale process is the clearance of your final tax payment, and then once the shareholder change has been complete, the business license renewal, and also, of course, the bank account change. Now, in relation to the timeframes for the shareholder change, if there is a Hong Kong shareholder as a direct shareholder in the business, would expect this to take just up to 7 days. If it's a mainland Chinese shareholder, the process can be a little more lengthy, up to 2 months. Similarly, when we look at the liquidation process, you must also clear your final tax payment. All business licenses that have been granted to the company have to be reversed, and that will happen by each individual department. There's a 3-year audit into the business and activities of the company, and we'd expect in general this end-to-end process to take around 6 to 9 months.
Yeah, I think, Rupert, this is not so dissimilar to other parts of the world in what we do, helping clients to exiting the entity or liquidating the entity. So it's not so dissimilar. I think what we should highlight here is also that, so as we mentioned, tax a few times along this presentation. So obviously, like many governments, tax is a very important subject for doing business in China. That's why in liquidating the business, company we need to go back 3 years, the last 3 years before closing down, to re-audit the financial and then get the tax clearance from the tax authority before they can proceed to shut down the company. And also another point, just to be 100% clear, when you mention about the difference in terms of time frame of change of shareholders. So changing of shareholder onshore in China would typically take 2 months to go through the process from administration to tax clearance, versus if you change outside of China, for example in Hong Kong, the time frame is much shorter. We will have another slide to speak about the benefit of Hong Kong as well.
Yeah, quite right, and thanks so much, Donald. That's a perfect segue onto actually what is our final slide, which is the benefits of using a Hong Kong holding company. And for a country that's gone through a little change over the last few years, one message that we're very keen to emphasize is of the continued relevance of Hong Kong. Over the years, Hong Kong has very frequently been used as a jurisdiction to inject an intermediary holdco owned by the Chinese parent, you can see in the blue box, and then the direct shareholder of the WFOE underneath. And on the right-hand side, there are some indication of the reasons why this has been the case. There is a double tax treaty agreement between Hong Kong and China. As we heard earlier, there's a 10% dividend tax on any profit repatriations. And under the DTA between Hong Kong and China, this will be reduced by 50%. And so you'll pay just 5% instead of the full 10. Donald just mentioned and emphasized the ease of shareholder transfer. We heard from Jack earlier within the incorporation process, how much more swift the notarization process is if you use a Hong Kong company, the familiarity that Hong Kong professional advisors have with WFOE requirements. And then as two more general comments, we have the international infrastructure within Hong Kong, the very robust and well-established banking system, the legal network, the depth of experience and within the tax advisors. So the infrastructure is key in it, and it's very easily accessible. And then the very final point is that Hong Kong remains a common law jurisdiction, offering a lot of similarities that many overseas investors are used to from their business elsewhere in the world. And with that, I think we're moving on just to the very final comment, which is how Intertrust can assist. So Intertrust in Greater China has got 5 offices. We're present in the 4 major financial cities in mainland China, and we've got a large office in Hong Kong, 220 employees in total. We've got an enormous amount of practical experience and technical expertise to handhold you and your business throughout any aspect of the incorporation and ongoing maintenance of those companies. We're always very keen to hear from our clients, and please don't hesitate to get in touch if we can help at all. So with that, we're going to move on to the Q&A, and the moderators have put up, I think, the first question that's come in from the audience. So, what would be my initial investment to start a business in China? Secondly, how convenient would it be working in, I think that's English language?
Yeah, maybe I take this one first. The initial investment is really the capital requirements, as we mentioned. So we typically advise clients to make a very rough budget on the next 12 to 18 months, how much cash you will require, and then we will typically use that amount as the registered capital for the registration. And obviously, when we speak about the investment, it's not just the capital, because depending on the business you are engaging in, you could actually using debt financing. You can use shareholders' loan to finance your investment in China. So this is something we will speak to the client and to really drill down to what business they plan to set up, what is the scale, in order to determine those figures.
Okay, so I think that actually is the last question that we've had come through. So we're going to give everybody 10 minutes back in their day. We just want to say from all of us at Intertrust and CSC, thank you very much for taking the time to participate. Our contact details will come up on screen in a moment. And as ever, please do not hesitate to contact us at any time. Thank you very much and have a fantastic day.
Thank you.
Thank you.